Do you think walking into Panama with a suitcase full of US dollars means the banks will roll out the red carpet for you? Wrong. Dead wrong. The brutal truth is that Panama's banking system is silently setting 5 death traps, ready to swallow your entire net worth whole if you do not learn the hidden rules of the game before you board that plane. Most foreigners arrive thinking they are about to enter a financial paradise. They leave humiliated with frozen wires and rejected applications. In this video, we are not going to explain anything to you. We are going to expose the unspoken passport hierarchy, the New York chokepoint that hijacks your wires, the compliance interrogation that destroys 90% of applicants, the silent curse placed on crypto traders, and the exit strategy nobody warns you about. Stay with us, because what you do not know about Panamanian banking will cost you everything. This is not a tutorial. This is a survival guide. Secret 1: The unspoken passport hierarchy. Let us begin with the lie that every offshore guru tells you. They claim that Panamanian banks treat all foreigners equally as long as your money is clean. That is a fairy tale. Behind the polished mahogany desks and the polite bilingual smiles of the account executives, there exists an unspoken, brutal passport hierarchy. This is a secret tier list that every single compliance department uses to categorize incoming applicants before they even glance at your financial statements. When you walk into a branch, the very first thing the compliance officer evaluates is the color of your passport cover. Banks operate complex internal risk matrices that are heavily influenced by international watchdogs, particularly the Financial Action Task Force, commonly known as FATF. If you hold a passport from a low-risk jurisdiction, a Western European nation, Canada, Japan, or Singapore, you will generally experience a relatively smooth onboarding journey. But what happens if you arrive holding a passport from a country sitting on a gray list or a jurisdiction experiencing political turbulence? The reality is harsh. Panamanian banks are privately owned, profit-driven institutions that are absolutely terrified of being penalized by international regulators. However, due to anti-discrimination laws, they will almost never officially reject you based on your nationality alone. Instead, they deploy a much more elegant and brutal weapon to push you out the door: the manipulation of the minimum opening deposit. For a low-risk applicant, the bank might cheerfully request $1,000. But the moment a high-risk passport hits the desk, the requirement mysteriously inflates. Suddenly, that basic personal savings account demands $25,000, $50,000, sometimes even $100,000 just to process the paperwork. Panamanian banks won't officially reject you based on your passport. Instead, they'll politely ask for a $25,000 minimum deposit for a basic savings account just to make you walk out the door yourself. Understanding this hierarchy is step 0, because if you do not know your tier in advance, you will waste weeks, thousands of dollars in attorney fees, and a transatlantic flight, only to be rejected with a smile. They don't say no, they price you out. Secret 2: The correspondent bank bottleneck. Now, let us assume you somehow survived the passport tier check and successfully opened your account. You fly home, log into your local banking portal, and initiate your first major wire to fund your shiny new Panamanian savings account. Days pass. A week passes. The money does not arrive. You panic. Your home bank insists the funds were sent. Your Panama bank swears nothing was received. So where the hell is your money? Welcome to secret number 2, the correspondent bank bottleneck. To understand this trap, you must understand the unique macroeconomic structure of Panama. Panama is one of the rare fully dollarized economies on the planet that operates without its own central bank. They use the United States dollar as their primary legal tender. And because there is no Panamanian central bank to clear and settle international USD transactions, every single cross-border wire entering or leaving the country must physically route through the United States financial system. Your money does not travel directly from your home country to Panama. It must transit through a designated correspondent bank in New York, massive institutions like JP Morgan Chase, Citibank, or Standard Chartered. These New York correspondent banks are some of the most heavily scrutinized financial entities on Earth. They face relentless pressure from the US Treasury and OFAC to crush any transaction that smells remotely suspicious. When you initiate a transfer, your home bank deducts the funds and marks the transaction completed. But your Panamanian banker still sees nothing. Your money isn't sitting in some Panamanian vault. It is being held hostage in a Midtown Manhattan tower by an algorithm that has flagged your transfer for review. The New York Bank's compliance department will eventually demand detailed documentation regarding the source of the funds and the economic purpose of the wire. You will find yourself begging an institution where you do not even hold a personal account just to release your own money. To survive this trap, you must practice proactive compliance. Notify your Panamanian bank well in advance of any large inbound wire. Preload them with invoices, contracts, or tax returns, justifying the transfer, so they can immediately satisfy the correspondent bank's inquiry the moment your wire gets flagged. Otherwise, you wait, sometimes for months. Your money isn't lost. It's held hostage. Secret 3, the compliance interrogation. So your wire finally lands. You feel relief. You shouldn't. Because before any of this even happens, you have to survive the most brutal filter in the entire Panamanian banking system, the compliance interview. Most applicants treat this as a friendly chat to establish rapport. That assumption alone destroys 90% of all foreign applications. The compliance interview is not a conversation. It is an interrogation, whether you are sitting in a glass-walled office in the heart of Panama City's banking district, or conducting a secured video call alongside your designated legal representative. The compliance officer has one job: to find a reason to reject you. The single most important question they will silently evaluate is your economic rationale. Why you, a non-resident foreigner, are specifically choosing to place your capital in the Republic of Panama, instead of keeping it secured in your home country. This is exactly where countless wealthy applicants commit financial suicide, by giving what they mistakenly believe are the right answers. If you tell the compliance officer that you are opening the account for privacy or tax reasons, you have just painted a massive red target on your own application. In the post-Panama Papers era of global financial transparency, words like secrecy, offshore advantages, or tax optimization are immediate, non-negotiable red flags that the officer is legally required to escalate. You must master the economic rationale hack. Your stated reasons must be conservative, verifiable, and entirely sterile of any tax evasion connotation. The strongest rationale is currency risk mitigation. Explain that you wish to hold a portion of your liquid savings in a stable US dollar-backed jurisdiction to hedge against the inflation or capital controls threatening your home country. Another bulletproof rationale is future lifestyle planning. State that you are actively preparing to apply for the Panamanian pension-a-due retirement visa, making a local account a logistical necessity. Or outline a documented intent to acquire local real estate, requiring a Panamanian funding source for developer payments and property taxes. Always bring supplementary documentation, correspondence with a local immigration attorney or a real estate broker, to physically prove your intentions are structured and legitimate. Say privacy, and you're already dead. Secret 4, the crypto and digital nomad curse. But what if you are not a traditional businessman with a corporate paycheck? What if you are part of the new generation of wealth, the crypto traders, the affiliate marketers, the dropshipping kings, the algorithmic day traders, the SaaS founders? Then prepare yourself, because secret number 4 is going to hurt. You are about to face a curse that no amount of money can lift. Panamanian banks are deeply, painfully, ruthlessly conservative institutions. They operate on legacy risk assessment models built in the 1980s. They want W-2 forms. They want corporate pay stubs printed on physical letterhead. They want notarized employment contracts. When a 30-year-old digital nomad worth $2 million walks into the branch, opens his MacBook, and proudly displays a Binance portfolio dashboard, what the compliance officer sees is not wealth. The officer sees a money laundering typology straight out of the FATF training manual. Imagine the scene. You sit down. You are wearing your nicest shirt. You open your laptop. You spin it around to face the banker. The room goes quiet. Here is my proof of funds. This is my crypto portfolio. $2.3 million. Verified on-chain. Audited by Chainalysis. Compliance officer. Slow blink. Sir, I see numbers on a screen. Where is the bank that issued these funds? Where is the employer? Where is the tax authority that has reviewed this income? There is no bank. The blockchain is the bank. The protocol is decentralized. It is mathematically verifiable. Compliance officer. Closes notebook. Sir, I cannot file mathematics in our compliance system. I need a name, an address, and a regulator. Without that, this is, by our definition, an unverified source of funds. I am very sorry. That moment of humiliation, when a banker who earns $30,000 a year dismisses your 7-figure portfolio with a pitying smile, is the curse. It does not matter how much money you have. If your wealth comes from crypto or e-commerce, you don't need a bank statement. You need a financial translator. You cannot force a 60-year-old Panamanian compliance officer to understand DeFi. You must transform your digital wealth into a format the bank already speaks. The strategy is corporate structuring. Establish a formal limited liability company in a reputable jurisdiction, Wyoming, Delaware, Estonia, or the British Virgin Islands. Funnel all decentralized income into that legal entity. The company then pays you a documented monthly salary or issues quarterly dividends, generating a clean, predictable paper trail. When you return to that compliance interview, you no longer present as a crypto trader. You present as the director of an international digital marketing firm. To seal the deal, hire a certified public accountant. To issue a formal letter of income verification, translating your modern wealth into the conservative dialect of legacy banking. Secret 5, the exit strategy. But you think surviving the compliance gate is the end of the road? Don't celebrate yet. Welcome to the second hell of Panamanian banking, the place where your money flows in easily, but might never flow back out. This is secret number 5, the exit strategy. The chapter every offshore guru on YouTube refuses to film. When you initially deposit your funds, the scrutiny is intense. However, Panamanian banks are equally, often even more, paranoid about massive sudden outbound capital flights. Their compliance algorithms are specifically calibrated to detect layering, the second phase of money laundering, where criminals shuffle funds rapidly across borders to obscure the origin trail. If you let your savings sit quietly in Panama for 2 years, then suddenly attempt to wire $300,000 to a real estate escrow account in Lisbon or Dubai, the system will trigger an immediate, hard freeze on your entire account. Everyone teaches you how to open the vault. Nobody tells you that taking a large sum out of Panama requires more paperwork than putting it in. To execute a successful outbound wire, you must master the unwritten protocol of pre-clearance. You cannot simply click send and pray. Before initiating any significant outbound transfer, you must proactively contact your assigned account manager. Explain precisely where the money is going, who the ultimate beneficial owner of the recipient account is, and the exact economic justification for the wire. Provide the underlying paperwork upfront. If you are buying property, supply the signed purchase agreement and the escrow notary's contact details. If you are paying a corporate invoice, hand over the commercial contract. The bank's compliance department must review and manually authorize these documents before they release your funds. This pre-clearance process can take days, sometimes weeks if translation is required. Therefore, your exit strategy demands meticulous timeline buffering. Build chronological cushions into every international deal, so that your real estate closing in Madrid does not collapse while your own money sits frozen in a Panamanian compliance review queue. Easy in, brutal out. Before we close, we must shatter the most pervasive illusion surrounding Panamanian banking. For decades, Hollywood movies and the Panama Papers scandal have fed the world a fantasy that opening an account here lets you vanish from your home tax authority's radar. That fantasy is dead. The modern offshore landscape is governed by FATCA for U.S. citizens, and the Common Reporting Standard, or CRS, for the rest of the developed world. Under these treaties, Panamanian banks are legally required to automatically transmit your account balances, your tax identification number, and your annual interest gains directly to the tax agency in your country of fiscal residence. Every single year, forget the Hollywood movies. Panama will report your account balance to your home country. You are not here for secrecy. You are here for structural safety. The real value is asset protection and jurisdictional diversification. A legal firewall against domestic banking collapses, capital controls, and frivolous civil lawsuits. A creditor in your home country cannot simply phone a Panamanian judge to freeze your account. They would have to launch a multi-year, 6-figure international legal battle to even attempt it. Not secrecy, sovereignty. So here is the brutal truth. Panama's banking system is not a paradise. It is a minefield disguised as a paradise. And every step you take alone, from selecting the wrong tier of bank to mishandling the correspondent wire, to fumbling the compliance interview, to mismanaging your exit, can detonate years of your hard-earned savings into a frozen, unreachable account. Do not walk into that minefield alone. What you need is not just a banker. You need a financial translator and a legal shield walking 3 steps ahead of you, defusing each trap before you ever see it. Our team has spent years escorting hundreds of foreign clients through this exact gauntlet. Negotiating with the right banks, structuring the right corporate vehicles, drafting the right pre-clearance dossiers, and rescuing accounts that other firms left frozen. Click the link in the description below to schedule a private consultation with our legal team through our official website. Stop guessing. Stop gambling with your life savings. Let us walk you through the doors that the average foreigner never even knows exist. And finally, if this video saved you from a 6-figure mistake, hit the like button, subscribe to the channel, and drop your toughest banking question in the comments. We read every single one. See you in the next expose.